You know the strategy. You studied the charts. You watched the videos. You learned the rules. You even know exactly what you are supposed to do when the market moves against you. And yet, when real money is on the line, something changes. You enter too early. You move your stop. You close a winning trade too soon. Then, one loss hits, and suddenly you need another trade to get your money back. The strange part is that you already know better. So why do you keep doing it? Because trading does not expose your lack of knowledge. It exposes the parts of your mind you have never learned to control. In this video, we are going deeper than strategies and indicators. You will discover why fear makes smart traders break their own rules, why the need to be right destroys good decisions, how one emotional loss can create a chain reaction, and why discipline matters more than another strategy. And by the end, you may realize something uncomfortable. Your biggest trading problem may not be the market at all. It may be the person sitting behind the screen. And once you understand that, the way you see every trade can change forever. Chapter 1. The strategy was never the problem. Imagine sitting in front of your screen after months of studying trading. You know the strategy. You know the entry rules. You know where the stop loss should go. You know when to take profit. You have watched countless videos, read books, studied charts, and probably saved more trading advice than you could ever remember. Yet somehow, when the market opens and your real money is at risk, you become a different person. You see a setup, but instead of following your plan, you hesitate. Then you enter late. The trade moves against you, and fear starts speaking louder than your rules. You tell yourself, just give it a little more room. The loss gets bigger. You move the stop. You wait. You hope. And when the trade finally closes in a loss, you feel angry. Not only because you lost money, but because you knew exactly what you should have done. That is the painful part. You were not missing information. You were missing control. This is where many traders misunderstand their real problem. They think the answer is another strategy, another indicator, another course, another book, another secret entry pattern. They believe that somewhere out there is a perfect system that will finally make them consistent. So they keep searching, they keep learning, they keep collecting knowledge. But knowledge is not the same as execution. Knowing what to do and doing it when your emotions are screaming at you are two completely different skills. You can know the rules and still break them. You can understand risk and still take oversized positions. You can know that revenge trading is dangerous and still place another trade because you cannot accept a previous loss. You can understand patience and still force a setup because you are afraid the next opportunity will disappear. This is the trap. Your brain can understand the right decision, while your emotions demand a completely different one. And when money is involved, those emotions become powerful. Fear tells you to escape. Greed tells you to stay longer. Ego tells you that you must be right. Regret tells you that you should have entered earlier. Hope tells you that the losing trade will come back. Suddenly, the market is no longer just a chart. It becomes a test of your identity. Every loss feels personal. Every missed trade feels like failure. Every winning trade feels like proof that you were right. And this emotional connection changes everything. The trader who cannot separate his identity from the outcome of a trade will constantly fight the market. He will try to predict every move. He will try to avoid every loss. He will try to prove that his analysis was correct. But the market does not care about being fair. It does not care how much time you spent studying. It does not care how confident you feel. It does not reward you because you deserve it. It only exposes your decisions. That is why two traders can use the same strategy and get completely different results. One follows the plan, the other follows his emotions. One accepts uncertainty, the other needs certainty. One takes a loss and moves forward. The other takes a loss and tries to recover it immediately. Same market, same strategy, completely different results. So understand this carefully. Your strategy might need improvement, but if your emotions control your decisions, improving the strategy will not solve the deeper problem. You will simply use a better strategy with the same emotional habits. And that is where the real battle begins. Because once you stop asking, what strategy am I missing, and start asking, why can I not follow what I already know, you finally begin looking in the right place. And the answer waiting there may be far more uncomfortable than any losing trade. Chapter 2. When fear takes control, there is a moment every trader knows, even if they never talk about it. You enter a trade because the setup looks perfect, your analysis is clear, your plan says to stay in the trade. Then the price moves slightly against you. Nothing has actually changed. The setup is still valid. Your stop is still where it should be. The market is simply moving normally. But suddenly, your chest feels tight. You start staring at every candle. You refresh the chart. You calculate how much money you could lose. And a voice inside your head says, maybe I should just get out. You know the plan says to stay. But fear does not care about your plan. Fear wants relief. So you close the trade. Seconds later, the market turns and moves exactly where you expected. You watch it happen without you. Now you are angry, frustrated, and disappointed. You tell yourself, I knew it was going to go up. But deep down, you know the truth. You did not lose because your analysis was wrong. You lost because you could not tolerate uncertainty. This is one of the most dangerous parts of trading psychology. Fear does not always look like panic. Sometimes fear looks like hesitation. Sometimes it looks like taking profits too quickly. Sometimes it looks like moving a stop loss farther away because you cannot accept being wrong. Sometimes it looks like refusing to enter a good setup because you are afraid of losing again. Fear can even disguise itself as careful thinking. You tell yourself that you are being responsible. You tell yourself that you are protecting your account. But sometimes you are not protecting your money. You are protecting your emotions. And there is a huge difference. When you trade to avoid emotional pain, your decisions become focused on feeling safe instead of following your process. That is when your strategy begins to collapse. Think about what happens after a few losses. You become more cautious. Then another setup appears. You see the signal, but your mind remembers the last loss. You think, what if this one fails too? So you hesitate. The opportunity disappears. Later, the market moves exactly as expected. Now regret enters the picture. You feel that you missed easy money. The next setup appears, and this time you jump in too quickly because you do not want to miss another opportunity. Fear created hesitation. Regret created urgency. Urgency created another mistake. And suddenly, one emotional reaction has created an entire chain of bad decisions. This is why emotional control matters so much. The market does not need to destroy your account with one massive mistake. It can happen through dozens of small emotional decisions, a slightly bigger position, a slightly wider stop, a trade taken out of boredom, a profit taken too early, a loss held too long. Each decision seems small in isolation, but together they create a pattern. And the most dangerous part is that you may still believe you are following your strategy. You are not. You are following your feelings while using your strategy as an excuse. Let me tell you something important. Fear will always exist in trading. The goal is not to become fearless. The goal is to stop letting fear make the decision for you. A professional trader can feel fear and still follow the plan. They can feel uncertainty and still wait. They can experience a loss and still remain calm. That is the difference. Emotional strength does not mean you stop feeling. It means you stop obeying every feeling you have. And once you understand that, you begin to see the next enemy waiting behind fear. Because sometimes you are not afraid of losing money. Sometimes you are afraid of being wrong. And that fear can become even more dangerous. Chapter 3, the need to be right. What if the biggest reason you lose money is not that you hate losing, but that you cannot accept being wrong? Think about the last time you entered a trade with strong conviction. You studied the setup. You believed the market was going to move in one direction. Then the price moved against you. At first you stayed calm. You told yourself it was just a temporary pullback. Then it moved further against you. Your confidence started turning into tension. You looked at the chart again and searched for reasons to stay. The market will turn. This level should hold. There is still a chance. Notice what happened. You stopped analyzing the market and started defending your opinion. This is where ego quietly enters trading. Ego does not always look arrogant. Sometimes ego sounds reasonable. Sometimes it sounds intelligent. It tells you that your analysis was good and the market simply made an unusual move. It tells you that you should give the trade more time. It tells you that closing the position means admitting defeat. And suddenly, a simple trading decision becomes a personal battle. You are no longer asking, what is the market telling me now? You are asking, how can I prove that I was right? That small difference can destroy an account, because the market does not reward you for being right in your mind. It rewards disciplined decisions under uncertainty. A trade can be based on excellent analysis and still lose. That does not make you a bad trader. A losing trade is simply one possible outcome inside a system. But when your identity becomes connected to being right, every loss feels like an attack on you. You become defensive, you hold losers longer, you move your stop, you add to positions. You search for more information that supports your original idea while ignoring everything that contradicts it. This is not analysis anymore. This is emotional protection, and emotional protection is expensive. Imagine 2 traders facing the exact same losing position. The first trader looks at the plan and says, "The setup is invalid. I take the loss. It hurts, but the decision is clear." The second trader says, "I cannot be wrong here." He waits, he hopes, he changes the rules. The loss grows. The market eventually forces him out. The first trader lost money. The second trader lost money in discipline. That difference matters. You do not need to win every trade to become profitable. You need to become comfortable with being wrong without becoming emotionally unstable. That sounds simple, but it requires a major shift in how you see yourself. Your trade is not you. Your prediction is not you. Your account balance is not you. A losing trade does not make you stupid. A winning trade does not make you a genius. Once you separate your identity from the outcome, something powerful happens. You become free to change your mind. You become free to exit. You become free to say, "I was wrong." And that sentence, which once felt like weakness, becomes a sign of strength. Because the strongest trader is not the one who predicts everything correctly. It is the trader who can accept new information without fighting reality. Understand this. The market will never bend to protect your ego. It will move wherever it moves. You can argue with it, hope against it, or fight it. But none of that changes the chart. And when your need to be right becomes stronger than your commitment to discipline, every trade becomes a test of pride. But ego has another dangerous side. After a loss, it can make you desperate to prove yourself again. That is when one bad trade can become 5, and 5 can become the beginning of a complete emotional spiral. Chapter 4. One loss turns into 10. The first loss is usually not what destroys a trader. It is what happens after the loss. You close the trade and stare at the red number on your screen. Your heart drops. You feel frustrated because the setup looks so good. Then a thought appears, "I can make that money back." It sounds harmless. It sounds logical. But that sentence can be the beginning of a dangerous cycle. You take another trade, not because your strategy gave you a strong signal, but because you want to erase the pain of the previous trade. You are no longer trading the market. You are trading your emotions. The next trade loses too. Now the pressure becomes stronger. You tell yourself, "I just need one good trade." So you increase your position, you enter faster, you stop waiting for confirmation, you start forcing opportunities that you would have ignored on a normal day. Then another loss arrives. Suddenly, you are no longer trying to make a good decision. You are trying to escape the feeling of being down. This is revenge trading, and it rarely begins with anger. It often begins with disappointment. You expected the trade to work. It did not. You expected yourself to be right. You were not. You expected the market to give you an opportunity. Instead, it took money from you, so your mind starts searching for a way to restore balance. One more trade. Those 3 words can become incredibly dangerous. One more trade to recover. One more trade to prove yourself. One more trade because the next setup looks perfect. One more trade because you cannot finish the day with a loss. And before you realize it, one loss has become 3. 3 becomes 5. 5 becomes a large drawdown that was never part of your original plan. The strange thing is that your strategy may still be completely fine. The problem is that you stopped using it. You changed the rules because your emotional state changed. This is why traders often say, "My strategy works, but I cannot make money with it." The strategy may not be the problem. The trader's behavior under pressure is the problem. Think about a professional athlete after making one mistake. They cannot spend the rest of the game trying to undo that mistake. If they do, they create another mistake, then another. The only way forward is to return to the next play. Trading works the same way. The previous trade is finished. You cannot change it. You cannot negotiate with it. You cannot recover it emotionally. Your only responsibility is the next decision. But when emotions take control, the past follows you into every new trade. You enter the next position carrying the memory of the previous loss. Then you make decisions based on what happened instead of what is happening now. That is how the market gets inside your head. And once it does, every candle feels personal. Every pullback feels threatening. Every missed opportunity feels painful. You become reactive instead of deliberate. The solution is not to promise yourself that you will never revenge trade again. Promises made in calm moments often disappear during emotional moments. The real solution is to understand the moment when your mindset changes. Notice when you stop following your process. Notice when you feel the urge to recover money immediately. Notice when the goal changes from making a good trade to getting your money back. That moment is the warning sign. That is where discipline must take over, because your greatest advantage is not knowing how to make money after a loss. It is knowing how to stop a loss from controlling your next decision. And once you learn that, you discover something even more important. Discipline is not about forcing yourself to trade perfectly. It is about having the strength to do nothing when your emotions are demanding action. Chapter 5. Discipline beats knowledge. You can know everything about trading and still lose because knowledge tells you what to do. But discipline determines whether you actually do it when the pressure arrives. This is the part most traders underestimate. When you are calm, discipline feels easy. You can look at your rules and say, of course I would follow that. But trading does not test you when you are calm. It tests you when you are afraid, frustrated, excited, greedy, or desperate to recover a loss. That is when your real habits appear. You may have a perfect trading plan written on paper, but the plan means nothing if you abandon it the moment the market moves against you. Discipline is not about having more information. It is about having fewer emotional decisions. A disciplined trader does not need to predict every move. They need to follow a process. They know where they enter. They know where they exit. They know how much they are willing to lose. Most importantly, they accept that the next trade may lose. That acceptance changes everything. When you accept uncertainty, you stop demanding that every trade work. You stop watching every candle with desperation. You stop trying to control something that cannot be controlled. You begin focusing on the only thing that belongs to you, your decision. This is where many traders make a major mistake. They think discipline means forcing themselves to take every valid setup. But sometimes discipline means staying out. Sometimes discipline means closing the platform. Sometimes discipline means walking away after a losing trade because you know your emotions are no longer stable. Sometimes the best trade is no trade at all. That can feel uncomfortable because doing nothing does not give your ego anything to celebrate. There is no excitement, no instant reward, no feeling that you are taking action. But successful trading is not about constantly doing something. It is about doing the right thing at the right time and having the patience to wait when the right time has not arrived. Think about how powerful that becomes over hundreds of trades. One emotional decision may not seem important, but repeated emotional decisions create a pattern. The same way one disciplined decision may seem small, repeated discipline creates consistency. You stop moving your stops. You stop chasing price. You stop increasing position size because you are angry. You stop taking random trades because you are bored. Slowly, your results begin to change because your behavior has changed. And this is the deeper lesson. You do not become disciplined after becoming profitable. You become more consistent because you become disciplined first. The money is the result, not the starting point. Your goal should not be to make every trade profitable. Your goal should be to make every decision intentional. Some decisions will still lose. That is normal. The difference is that a disciplined trader can lose without losing control. They can accept the red day without turning it into a red week. They can accept a missed opportunity without chasing the next one. They can accept being wrong without trying to prove themselves right. This is emotional maturity in trading. You are no longer asking the market to make you feel successful. You are measuring success by whether you followed your process. And once that happens, something inside you becomes quieter. You stop needing every trade to work. You stop needing every prediction to be correct. You stop needing the market to give you permission to feel confident. You become steady. But there is still one final battle. Even after you understand discipline, even after you learn to control fear and ego, you must face the person you have been throughout your entire trading journey. Because the final transformation is not about learning a new strategy. It is about becoming a different trader. Chapter 6. The moment you finally take control, one day, you will sit in front of your trading screen and notice something feels different. The market will move against you and you will not panic. A winning trade will appear and you will not become greedy. A setup will disappear without you and you will not chase it. You will still feel fear. You will still feel excitement. You will still feel the urge to act. But for the first time, you will understand that having an emotion does not mean you have to obey it. That is the moment everything begins to change. You finally realize that becoming a better trader was never about finding a strategy that could remove uncertainty. It was about becoming strong enough to operate inside uncertainty without losing control. You stop asking the market to give you confidence. You stop expecting every trade to prove that you are smart. You stop treating losses like personal failures. A loss becomes information. A missed trade becomes part of the process. A winning trade becomes just another result. Nothing needs to define you. And that changes the way you trade. You begin to follow your rules even when your emotions disagree. You accept the stop loss before entering the trade. You accept that the setup can fail. You accept that sometimes the market will move without you. You accept that being wrong is not the same as being weak. This acceptance creates something most traders spend years searching for: peace. Not the peace of knowing what the market will do, because nobody knows that. It is the peace of knowing what you will do when the market does something unexpected. That is real control. You cannot control the next candle. You cannot control volatility. You cannot control whether a perfect setup wins or loses. But you can control your risk. You can control your patience. You can control whether you follow your plan. You can control whether one loss becomes a revenge trade. You can control whether fear becomes your decision maker. And when you focus on those things, trading becomes less about prediction and more about execution. Less about ego and more about discipline. Less about proving yourself and more about protecting yourself. The trader you become is shaped by the decisions nobody sees. The decision to walk away after a bad day. The decision to wait instead of chase. The decision to accept a small loss instead of creating a large one. The decision to close the platform when your mind is no longer clear. Those decisions may not look impressive from the outside, but they are the decisions that build consistency. You finally understand that the market was never your enemy. It was simply revealing you. It showed you your fear. It showed you your impatience. It showed you your need to be right. It showed you your greed. It showed you your weakness. But it also showed you what could be changed. And that is the most important realization. You do not need to become emotionless. You need to become aware. You need to recognize the moment when emotion begins turning into action. You need to pause before the impulse becomes a decision. You need to remember that one trade does not matter nearly as much as the pattern of decisions you make over time. That is where real consistency is built. Not in one perfect trade, not in one perfect strategy, but in thousands of small moments where you choose discipline over impulse. So the next time you sit in front of the screen, remember this: you already know more than you think you know. The question is no longer whether you need more knowledge. The question is whether you are willing to practice what you already understand. Because the market does not need a smarter version of you. It needs a calmer version. A version that can lose without breaking, win without becoming reckless, and wait without becoming desperate. That is the trader who finally takes control. And once you become that trader, you stop fighting the market because you finally stop fighting yourself.